Hello everyone, welcome back to my channel. So this video marks the beginning of the week number 79 in this road to 100k realized return challenge, and the week started in a positive note, at least for the tech stocks. The Qs are up close to 0.6% on the back of the expectation that earnings on the tech companies that are coming later this week will be positive. The main market movers for the Nasdaq, and of course for the Qs for that matter, is the Apple and also the Meta, which are basically pushing the market upwards. As you can see, Apple here, for example, is going up by 2.75%. Meta is also going up. The last time I saw it, yeah, 2.3%. And even though, of course, there were some developments on the geopolitical front. Apparently, there were more threats by the U.S. President Donald Trump, and these threats are directed to Canada, in which, yeah, basically the U.S. President threatened to impose a 100% tariff on Canada in case they sign or agreed upon a free trade deal with China. And yeah, apparently the response from the Canadian Prime Minister Mark Carney was that they have no intention to pursue such a deal with China, which basically calmed down the markets. And so that's also one of the reasons why the market is going up today. The IWM is a bit of an outlier. It was up briefly during the beginning of the session, but now he has reversed and is now at 264. However, when it comes to the trades that we did this week, at the beginning of this week, we decided to take our chances. And when it comes to the IWM, the market opened when the market opened, the shares were priced at around 264.9. And since we want to capitalize on all the volatility that exists ahead of all the earnings releases that will come later in this week, and also the FOMC meeting, even though in all likelihood rates will be unchanged after the meeting, we decided to basically not receive as much premium, not maximizing our premium by selling at 266 strike price calls on IWM, which, as you probably still recall from the last video, it was the price at which we bought these 200 shares from IWM. But we decided to sell the shares, or sell the calls, at a strike at 267, and because of that we still received a $2 premium on each share. So we received $400, which was, I believe, quite good. And still we have the door open for a potential capital gain of $200 if the shares are sold at that particular price. So yeah, we'll see. For the time being, also we could have waited instead of buying back those calls from last week and roll over to the end of this week. We could have waited. As you can see also in here, we are losing on the calls. We could have sold these calls at a much higher price, but yeah, with 2020 hindsight, it's always easier to make decisions. We didn't know this was going to happen, but still, it was still a good premium, and as long as we can keep ourselves within a striking distance of our intended strike price, we can then continue to accrue more premiums with these shares. Now, as things stand at the moment, we will be waiting, of course, to sell these shares at 630, and with the remaining buying power that we had, and of course to maximize the usage of our buying power, we went ahead and sold 3 puts on ARKK, also in an attempt to capitalize on the tech stock, on the tech companies earnings releases for this week. We went conservatively. We went for an 11 delta put, so 89% of expiring worthless. So in this case we received 30 cents per share, if I recall correctly. And so yes, we received 30 cents per each share. And so at this moment we are with a profit, so of a profit for this week of 1175 plus these $490, which gives us something along the lines of 1665, give or take. Of course we have then to discount the commissions, but for sure this will not be the final profit for the week. And the reason is that if we manage to get these shares sold at 267, we will pocket a $200 capital gain. But if I see that throughout the week this price will not be reached, we will simply roll down, meaning we will buy back these calls, of course at a much lower price, and then we will sell again 2 calls with a 266 strike price in an attempt to break even on the shares, but still collecting some more premium. So for sure this will not be our final profit for the week, regardless of what is going to happen, even though all these calls will expire next Friday. So this is where we stand at the moment. We have a lot of earnings coming from Microsoft, Apple, from Tesla, and also from Meta. And we have, of course, our FOMC meeting on Wednesday. And of course, because the rates in all likelihood will remain steady, the focus will be on the guidance that the Fed chairman will give in the post-decision press conference. So for sure we will be very focused on that. And yeah, so far this is pretty much it. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel. And we'll reconvene at the end of this week to see how the trades played out and to close out the week number 79 in this challenge. And I'll see you there.